One investment for a long-term diversified portfolio, Ed Hyman, thinking in the international sphere, what do you think we should all own some of?
In the international sphere, I think Japan is the best place to take a look. Like no market is uniform.
Right.
So the financial stocks are inexpensive. But so I like Japan outside the U.S.
Right.
And I've probably been to Japan 50 times, but I don't remember Japan ever looking this possibly better. Say, for example, there's been a significant increase in immigration.
Really?
Without
Very unusual.
Very unusual. And they still tell me, oh no, we won't have any immigration. But the figures keep going up and up and up and up.
Because they need workers.
In order to grow, they have to
Right,
have.
right.
But they've been quite xenophobic about
Yes.
that so far. That'd be my favorite
right.
foreign picture.
And let me just sort of build on what Ed has said about Japan as an interesting place, because the yen, ironically, has been a defensive currency because interest rates are already zero in Japan. Whenever there's a risk episode in world markets, interest rates come down in the developed world, but they're already at zero in Japan. And so the interest rate differentials narrow in favor of Japan, and the currency strengthens. Also, they're a net importer of commodities. So when you get a bad moment of economic activity, it's good for the terms of trade in Japan. And so the yen is somewhat of a defensive currency, even though everyone's worried about it going down. It's behaved in a very defensive way. And there are some businesses within Japan that are quite defensive in nature. Companies like KDDI, for example, leading mobile and fixed line operator, 6-7% free cash flow yield, growing at mid-single digits. Or companies like Seacom in commercial alarms, 60% market share with a 5% plus free cash flow yield. You don't have to buy a JGB with a 0% yield. You can buy a sound business with a 5, 6, 7% free cash flow yield in a defensive region to create some anchor in your portfolios overseas.
I know, Matt, you've been involved with a number of Japanese companies for some time.
I would agree with what you said, that I think that business confidence has definitely improved in Japan. I think capital allocations improve. We've seen dividend payout ratios move up markedly. I remember the days where you were lucky to get a 10% dividend payout ratio in Japan. We have companies now in Japan that are distributing 80% of their earnings, buying back stock, paying dividends.
Wow.
That's a big change.
Right.
We have thoughtful conversations with Japanese management teams about their capital plans. And so I think that is a big change versus 15 or 20 years ago. Net, though, like the rest of the world, valuations have gone up some. We've been a net seller the last couple of years of some of the names that we've loved in Japan and mentioned on the show in the past, but we still find some sound opportunities in Japan.